Today, I'll be performing top-down analysis and technical analysis on 5 different pairs. I'll be showing you guys what I'm expecting these pairs to do and exactly how I'm making each of these predictions as well. So if you're interested in learning more about how we make predictions like this each and every week, then make sure you join the almost 100,000 trader community we have here at the trading channel by clicking that subscribe button and the notification bell, because we come out with videos like this each and every week. Also, click that like button for me while the intro and disclaimer roll, and I'll see you guys directly after. Alright guys, so as per usual, we will be starting today's analysis on the euro dollar. I'll give you guys my predictions on this pair, why I think that may be what happens, considering the structure levels that are around where price action is now, and also considering the trend of the market. So if you're new, that's exactly what we do in these videos. Each and every week I produce a video showing you guys what we're expecting out of different pairs based around structure and trend. So here for the euro dollar, let's take a look at this, and we have to ask ourselves the first question, which is what trend is this market currently in? For the euro dollar, yes, we're in a period of consolidation, but it is with a downtrend bias, and the reason for that is because we have had a downtrend before this little period of consolidation happened. This was our most previous level of resistance. We talked about this last week. We actually got a trade from here, still involved in half that position to the downside, but last week we were coming into this little zone of support around 1.1541. We thought that level could possibly act as support and push the market up, at least for a little counter trend bounce, maybe even completing this head and shoulders pattern right here, and then the market continuing down afterwards. None of that even played out though, because we didn't get any kind of entry reason on a smaller time frame. So after we broke below this level, let's actually go down to a smaller time frame to talk about this. As we can see, this is our level of major structure. The reason for that, guys, if you're new, is because this level has been tested multiple times. We have 5 tests around this level. When a market has tested a level of structure multiple times, more likely than unlikely, once it tests that level again, you will see some kind of reaction from it. So let's go down to a 4-hour chart. And as you can see, this market, once breaking below that major level of structure, like so, once we broke below that level, we pushed back up to that level and have since broke into trend continuation to the downside, considering the major trend we have on the daily chart, which is a downtrend. Considering that we've already broke below the major level of structure, which was right here at 1.1541. Now that we've determined what the market's done, we're going to talk a little bit about where it's likely to go. Because we've done all of that, what we're expecting now is at least a test of 1.1307. How are we going to get down there? Well, it's quite possible that we go straight down there to 1.1307. It's also possible we have some type of pullback and then a push down. For us here at the trading channel, we'll wait on that pullback, and we'll wait on this pullback to come into 1.1541, or we'll take advantage of the other numerous trend continuation strategies that we have here at the trading channel. But for the purpose of this video and structure-based trading, we'll be looking for a move back up into 1.1541, a possible entry on a lower time frame, and then the push down and trend continuation here on the euro dollar. So that's what we're expecting out of this pair. If we do get all the way down to 1.13 and we do something like this, where the market just pushes down to that level, that's a great level to start looking for counter trend possible trades to the upside. So now that we know what we're looking for, what we're expecting out of the euro dollar, and you can see how we performed that analysis, let's go ahead and move on to our next pair and do that all over again. So this is that consistency I was talking about, guys. We're literally consistently doing the same exact analysis on each and every pair. Hopefully that makes sense. So here on the pound dollar, I'm actually, for transparency's sake, going to play you guys a clip from last week's video where we said that we expected this market to come back up into our yellow zone, provide trend continuation. I'll show you this on a smaller time frame right before we look at that clip. Here's the 4-hour chart. Last week the market had broken below our little yellow period of structure right here, and we said that we expected this market to come back up into that level and provide trend continuation. We actually got a trade out of that. We'll also take a look at after the clip. So right now let's go ahead and go to that short clip of last week's video where we talked about this level on the pound dollar, and I'll be right back afterwards. We have since then created another impulsive move down. So now this is our previous high. This would be our previous support level. That previous support level is right in line with the daily level of major structure that we're looking for to be resistance. So that's an area in our yellow box here where we're going to be looking for specific entry reasons to try to take this market lower. So guys, as you can see in that clip, we talked about this yellow zone being a possible level of resistance since the market had broken below that, and we were in a downtrend considering our 4-hour time frame. Once we get this pullback back up, we ended up getting an entry reason on a smaller time frame, and the market did push down into trend continuation here on the pound dollar. I'll put a screenshot of that trade to the left hand side of your screen. Now let's go back to the daily chart, and we'll talk a little more about what we're expecting now out of the pound dollar. So the pound dollar, we said last week, was in an uptrend, but we had that short bias on a 4-hour time frame, which allowed us to take advantage of that short trade. But here on the daily chart, this market is currently in an uptrend, and we're going to be in an uptrend here on this market, at least for the way we determine trend here at the trading channel, until we break below this level of support. Because of that, we're looking for long trades. Now that we are definitely in an uptrend on the daily chart based on our analysis, what we're going to do is drop down to a smaller time frame. We're definitely in a uptrend on this chart. What have we just done? That's kind of important. We've just broken above this zone of important structure that we looked at from last week. Since we broke above it, it was resistance. Now that we've broken above it, it becomes support. So that's very important, and we'll see why when we drop down to smaller time frames. Smaller time frame here on our 4-hour chart. What have we done? Well, we were in a downtrend on the 4-hour chart, so that kept us from wanting to be in long trades last week, gave us the opportunity to enter a short trade last week. Now this market has broken above its previous resistance level, not quite in a uptrend yet, but giving us a possible reversal scenario, pulled back into that zone, and from here we're expecting this market to head higher. We're actually expecting trend continuation to the upside, considering that in the daily chart we're in an uptrend. Also here on the 4-hour chart, we've now created a reversal situation. So for that reason, we're expecting this market to head higher from 1.3051 and really from anywhere in our box here. So we have a long bias, a long prediction here on the pound dollar for the rest of this week. And we'll talk about that more in next week's video. We'll see how this plays out in next week's video as well. Next up, we're going to look at the dollar yen. We're going to go back to the daily chart. On the daily chart, we're also going to talk a little bit about what we looked at last week on this pair, but on the daily chart, you can see that this pair came up into a very important level of structure looking left. And guys, this is how we're pointing out these levels of structure after reading trend. What we can do to help increase our odds of being correct with our predictions is take a look at major levels of structure and trade based around them. So here we have this major level of structure we pointed out last week. We even said this in last week's video, which we will play a clip to in just a second, that this market could get to the top of our yellow box and then head lower, which is exactly what happened. So before we go any further, actually, let's go ahead and take a look at that clip from last week. It's a very short clip, and I'll be right back afterwards. This zone, if we end up getting some trend continuation right here, which it looks like we might see considering the candlestick formation we're looking at and a few other rules that we have. And if that's the case, then we can even look a little higher in this box for possible double top trades to push the market down. So on the dollar yen, looking for counter trend trading opportunities if we get back up into that zone. Still, we can look for trend continuation opportunities back up to that zone. And why is that? Well, guys, it's very, very obvious why we can look for trend continuation at the moment. Look at this uptrend we've had. It's quite possible that this market could push even to the very top of this box before pushing down. That's a lot of pips we could possibly capture before the counter trend move that comes here on the dollar yen. So looking for possible trend continuation moves as well here on this pair. Okay guys, so let's talk about why we had that prediction that we talked about last week. Well, here you can see on the daily chart, we are definitely in an uptrend, right? And we have just broken above this resistance level. So that's why we had the trend continuation bias on the 4-hour time frame, which we'll drop down to now. As you just saw in the clip on the 4-hour time frame, we talked about, yes, this market has come up into our zone, but it was a pretty high likelihood we could get to the top of this box before heading lower, which is exactly what we did. And the reason we thought that is because of how strong this uptrend was. This uptrend being this strong means this market has a lot of momentum, and if we're in a zone of structure, we're probably going to make it somewhere near the top of that zone of structure before the market finds any type of resistance when the trend is this strong. So that's exactly what happened. Based on our prediction last week, this worked out perfectly. We got trend continuation from this area. We came up to the top of our box around 114.7. After hitting that 114.7 level, the market has since pushed down all the way to where? Well, at this point, we're right at that previous resistance. Let's zoom back out to the daily chart really quickly. So at this point, we're right at a previous level of major structure resistance. Now, what do you think we're going to be looking for at this point? Since we're still in an uptrend on the daily chart, yes, we've just been pushed down, but this push down, guys, something important to remember. When a market's in this big of an uptrend and we get a push down like this, yes, it can cause a complete reversal. Yes, it can cause this market to head lower for a very long period of time. But a more likely scenario is that we see a counter trend bounce down to the next level of structure and then a continuation of the trend. A market that already has momentum is likely to continue in that direction. This market definitely has momentum to the upside. So at this point, right now, around the 113 even handle, we are going to be looking for long trades out of the dollar yen because of this previous level of structure and considering the trend of the market. So combining those two things give us a long bias here on the dollar yen from the area we're at right now, and we'll be looking on lower time frames for long trades on this pair. Next up, we'll take a look at the Aussie dollar. This pair, last week we expected trend continuation out of it, and we definitely got that. Last week when we were doing this video, we were somewhere around here. We wanted to see this market push back up to our blue line before heading down because that would give us a more accurate trading opportunity. We never did see that pullback, therefore never got a trading opportunity, but we did go into last week expecting this market to continue in the downward direction, and that's exactly what happened. Now what are we expecting out of the Aussie dollar? Well, here on the Aussie dollar, what have we just done? Broke into trend continuation, looking left. We have a major level of structure looking left as well at 0.71105. With that being the case, we can look for that 0.71105 level to be a possible level of resistance. This market could use it for trend continuation and get all the way down to the 0.7 even handle. That's what we're going to be expecting out of this pair. Is there a chance that this pair goes higher, deeper in this retracement before going down and continuing in trend? Yes. Guys, it's not like these predictions are 100% accurate, nor are we going to just place a trade randomly at this previous level of structure. This is why we have to have a trading plan. Making predictions is not 100% of being a profitable trader or being a professional trader. You need a trading plan. You need a set of rules that you use in order to enter the market, even a full strategy based around these levels like we have here at the trading channel in order to make this into an actual trading plan, in order to turn the skill of technical analysis and top-down analysis into a profitable trading career. So next up, we'll take a look at our final pair, which is going to be the dollar Swiss. We'll zoom back out to the daily chart. Last week, we actually had a losing trade on this pair. We made a prediction based around major levels of structure at 0.9849 right here. The market found a little bit of resistance from that level. We were expecting this to push the market down to these previous resistance levels and then pop back up for trend continuation to the upside. That did not happen. What are we expecting now out of this market? Well, as you can see, we have our level pointed out. Right here is our zone. In our black box is what we're expecting to see resistance from. So if the market gets up to this level between 0.998 and 1.0 even, especially that 1.0 even handled number, we're expecting that to provide a fair amount of resistance for the market here on the dollar Swiss, and we're going to be looking for trading opportunities in that specific zone. Now, another thing we could see out of the dollar Swiss is this market pulling back. We're currently in an uptrend. We could see a pullback before we get to that level. If we get that pullback, we'll be looking for long trades in trend continuation because we just broke above this level of structure. We'll be looking for long trades at the 0.9849 level to push the market up to our resistance level in between 0.998 and 1.0 even before we look for short trades from that level. So that's what we're expecting here out of the dollar Swiss. That's our analysis on the top 5 major pairs. We do a video like this each and every week, guys, so subscribe, hit the notification bell if you're new and you'd like to be alerted when those videos come out. Join our email list in order to be alerted about free trainings we do. You can do so by going over to www.thetradingchannel.net. Also, if you're interested in taking some more advanced training and learning a step-by-step process to building a trading plan the exact way that we trade here at the Trading Channel, we also offer a paid program that teaches how to do that, along with one-on-one mentorship from me, your honest trading coach, and email analysis 3 to 5 times a week. If you are interested in that, then the link is in the description labeled EAP Training Program. That's going to do it for this video. I wish you all the best of luck in your future trades, and I will talk to you in the next one.